Unemployment remained at near historic lows in the September quarter at 3.3%. To discuss, CTU economist Craig Renney is in the studio. So 3.3, were you expecting that?
It's a very strong result. We were expecting it possibly to tick up just a little bit from where it was, but 3.3% is really strong print today.
A number of other economists were expecting it to nudge down. Why did it not go further downwards?
The honest answer is we don't know. We'll find out in the fullness of time. But one of the things we saw was a divergence between male and female unemployment rates, and male unemployment rates fell even further to 2.8%, whereas female unemployment started to rise. So that's one of the things we'll have to look at for in future is the extent to which that divergence continues and drives the overall unemployment rate.
So that could become a trend?
There's certainly the beginning of some evidence in that space, and the beginning of some evidence that female unemployment, which is increasingly insecure and part-time basis, that may become a continuing challenge in the labour market.
In terms of wage inflation, continue to go higher. That's not good news for the Reserve Bank.
No, it will certainly be giving the Reserve Bank some food for thought as to where they move next with the OCR, and they'll be wanting to see that sort of moderate over the longer run. What we would say is that wage growth is all pretty much concentrated in the private sector. When we look at public sector wage rates, they went up at half the rate of the private sector. So we think there's a little bit more that if we pick that apart, a little bit more to see than just that headline rate.
What's underneath that, though? What could drive the public sector wages higher?
Well, one of the things that we've yet to see is large awards in the public sector, and we know we have a number of those coming up, and that will be a challenge in terms of the government, keeping those under control, but also making sure that we're not losing frontline workers from the public sector into the private sector where wages are growing more quickly.
In terms of the Reserve Bank, they've got a review this month. 50 basis points, 75 basis points. If you're a picking man, what should they be doing?
For me, it's 50 basis points. I mean, if that. On the first page of the FSR, the first thing they say is actually they wonder whether or not monetary policy works to actually tackle inflation at this particular point in time, because of the nature of the way in which inflation is actually being generated. So 50 basis points is a much more, to me, much more restrained way of doing it, rather than trying to leap to 75 basis points and then having some regret.
So we've got a tight labour market. What's going to change that?
Right now, nothing inside New Zealand. It would be an overseas factor. It would be a big spike in oil prices. It would be a further global commodity shutdown, or another wave of COVID coming around the world. There's very little domestically that we can see to make that difference, and that's a good thing because there's a lot of strength in the New Zealand economy right now. But if there were to be a global factor, that would be the thing that would cause that change.
We are told nearly every day that there are dark clouds on the horizon, though.
Indeed, and those are again driven by external factors. So where we see slowdown in growth in the UK, which is almost certainly in recession right now, or the US or Europe, where you see conflict-driven slowdowns in the economy, that will feed inevitably through to New Zealand, and that's the sort of dark cloud I see on the horizon.
Unemployment then, has it bottomed out, or is it going to go further downwards or up?
It's a great question, and for me, unemployment is likely to stay pretty static where it is right now. We'll see increasingly unequal returns to that unemployment, so we may well see Māori and Pacifica unemployment start to tick up a little bit more, but we are likely to see the labour market remaining strong given domestic demands and given the fact that we've seen lots of vacancies available in the market right now.
And with open borders now, migration, are we going to see a flood of people to help boost that employment take?
One of the things that New Zealand has been consistently bad at is forecasting where migration is going to be in 12 months' time. One of the things I would say is that if there's a very strong labour market here with strong wages, that will encourage new people to move to New Zealand, especially if there are more dark clouds on the horizons elsewhere. But New Zealand's in a global market, and with strong labour markets in the UK, in the US, and in some other countries where we traditionally take migrants from, I don't yet see a big return to the kinds of migration patterns we saw pre-COVID.
So we might lose people to, say, Australia.
We might lose people to Australia, but we also won't then see people coming back from those other countries that we have traditionally seen them come from in the past.
What's going to happen with wage inflation then? Is it going to moderate?
One of the things that will be driven by is the inflation rate itself. And we'll be looking to see whether or not, if that inflation rate moderates because of global factors, then you may well see wage demand start to moderate as a consequence of that. And if unemployment does start to tick up and people's expectations of losing their jobs start to change because people are very certain about their jobs right now, that might lead to a downturn in wage demands in the future.